We got another key inflation report this morning known as the Producer Price Index inflation numbers, or PPI inflation numbers. These are the prices that businesses face in wholesale prices, their input costs. And although they were on the rise from last month, they were less than expected. So the markets are taking this well this morning. We had a PPI year over year come in at 2.1% compared to the 2.2% economists estimated. And then core PPI, which is PPI minus volatile food and energy, came in slightly hotter than estimated at 2.4% year over year compared to the 2.3% economists estimated. And then month over month, we had it was a little bit lower than estimated, coming in at 0.2% compared to the 0.3%. And then core PPI came in line with estimates at 0.2%. So the market's reacting to this very well because the markets, we had a much hotter than expected inflation report yesterday across every metric. So the markets took that negatively. The bond market sold off and yields spiked to over 4.5% yesterday. And there was a poor treasury auction and people weren't stepping in to buy the bonds as much yesterday. And this report is a little bit of a sign of reprieve, that especially that for regular PPI that came in lower than estimated, both month over month and year over year. So that's some good news. Obviously, we have some acceleration. It's still the hottest since April of last year, but the fact that it came in a little bit better than estimated is a breath of fresh air that the market needed, especially from yesterday's sell-off and the bond market's reaction to yesterday's CPI report. So although PPI inflation is still hot, this is some good news for the market. Let's see how the market ends up closing today and tomorrow.